Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, guys. Today we again will take a look at the euro currency. So as you can see, the recent ADP report was a bit worse than expected. So markets expected somewhere numbers above 200,000, while the real data was approximately the 190. So what does it mean? It means that the chances on the worse than expected non-farm payrolls data has increased, because as we said yesterday, ADP report has ADP numbers has 95% correlations when the non-farm payrolls release, and that significantly increased the chance that the non-farm payrolls data also will be a bit worse than expected. Besides, the recent comments from the markets suggest that many investors worries that if even market will show the 245 to 150,000, that will not be sufficient data to push market higher, because that will be approximately in a row with the expectation. So to get the upside surprise, it seems that market should show somewhere 2060 and above. Any data that will be less than the 240,000 probably will lead to the further dollar weakened and upside rally on the dollar related assets. So it's euro currency, forex markets across the board, or probably gold, and so on. So the recent data significantly increased chances, improved chances on the possible upward two-leg retracement, as we have suggested. But right now it's a bit not quite reasonable to expect the total completion of the A, B, C, bottom, D pattern. So 113. That's not quite reasonable right now. That's why in the first stage of this upward action, if it will happen, of course, we will be watching for the closest target. So 618 extension, minor extension of this A, B, C, D pattern, that stands right at the fib resistance. So this creates an agreement with the major fib resistance 110.70 area. Also, guys, why we choose this target? Because it stands below the daily overbought, so it could be quite reachable in the nearest future, while this target stands beyond the overbought, and it's not really actual, because if even market will show the rally to the upside, hardly it will reach this target, since the overbought will be the real barrier for further upward action. So that's why let's focus first on this area. And besides, this target is more suitable in the current circumstances. That's probably will be enough target. So right now, on the first glance, on the daily chart, it seems very clear and cloudless that finally we get this upward action, and so now we just do nothing but take the long position and be happy. But that's not quite this case, guys. If you'll take a look at the 4-hour time frame chart, you'll see what I'm talking about. Trend on the daily time frame chart is bullish. So on the 4-hour time frame chart, we have some complexity moment. So, and this moment that we do not like very much is that market hasn't quite reached the target of the ABCD pattern. So it not even hasn't been touched for a significant distance, but just few pips, guys. And take a look what has happened. Yesterday we said that this market is forming the bearish grabber. It's very probable that market will hit this target and turn to the upside again. That just should lead us to the logical finalizing of this setup and make the clear road for a possible reversal. But this has not happened. So take a look. That just not probably was enough time to do this, since the ADP report has come. So you can see that grabber has been erased by the opposite action, and right now market has moved through the monthly pivot point of the April, and it seems at the first glance that looks very nice. But guys, this is the worrying moment. We have the non-farm payrolls release ahead, so volatility could be significant. And if even market will not return right back down to this target and not hit it, but the chances on the deep retracement right now looks very significant. That's why we think that it's not necessary to be hasty and trying to take the long position here. Although, guys, the maybe risk reward ratio is still attractive. So if you will take the long position right now, this will be your target, but you will have to place stop below this level, because if even market will return right back down and hit this target, it will not mean that upward scenario has failed. Only if market will break through this level, the scenario will fail. That's why you will have to place stop somewhere in this area, and that's really not small move, especially for those of you who trade on intraday charts. Even on the daily chart, that will be not really very close to stop. That's why I think that it's just doesn't worth it of it. It's better to wait for the possible pullback. And the chances on this pullback really exist. We even think that market really has the chance to return it back down and hits the target. Because take a look at the hourly chart. On the hourly chart, market stands right now at a strong confluence resistance, 108.40, 108.58 approximately. It's confluence resistance. Also, guys, take a look that market has completed, almost has completed this A, B, C bottom, 1618 extension. So that's also an agreement. So very strong resistance area. You guys also could measure this ABCD. That's also will be the completing point. So despite what you will take in is the basis for the upward direction, this most recent ABCD pattern, or this one ABCD pattern. So anyway, market has completed both of them. And in perspective, we could get even the Gartner's 222 sell pattern right now. So as I said, if even market will not return right back down and will not hit this target, that's really possible. But the volatility that probably will appear due to the non-farm payrolls release tomorrow could trigger the significant retracement. That will let you to take the position with the significantly less risk. For example, if market will return right back down slightly to at least the 618 support of the most recent action, you will be able to place stop rather closer compared to current situation. That's why we think that in the current situation it's better to wait. If you already have taken the long position, that's good. So just move your stop to the break even if you have entered long somewhere in this area. Just move your stop to the break even. The task for you is a bit easier than for those who do not have any long position. And just let's see what will happen tomorrow. That's our current view on the euro currency.